Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Tuesday, September 3rd. Hope everyone had a nice long weekend. In this episode, Dell has been quietly crushing it. OpenAI has some new big names backing it, and Intel is exploring its options. Let's start with Dell. While investors continue to obsess with Nvidia and other AI companies, Dell is quietly crushing it. Dell reported earnings, and the stock is popping thanks to an 80% jump in AI server sales. We all know that AI chips are in high demand, but AI servers are also highly in demand, and Dell is one of the top vendors of AI servers. Dell reported $25 billion in revenue for the quarter, and $3.1 billion of that came from the AI servers. That's up 80% in one quarter, which is insane. You know, the AI server business pretty much rescued Dell because their other business units are seeing a decline in sales. Their PC and laptop sales were down 4% year over year to $12.4 billion, and their enterprise PC business was flat at $10.5 billion in revenue. AI legitimately might have saved Dell. Their stock is up 5% in reaction to these earnings and up almost 50% for the year. Dell also owns 80% of a company called SecureWorks. On Friday, before the long weekend, the company jumped 20% after a report that Dell is again exploring a potential sale of that cybersecurity firm. Dell hired Morgan Stanley to try to broker a deal with other private equity firms. I'll keep my eyes on that and report back any updates. In other AI news, OpenAI is seeking another round of funding that will value the company at $100 billion. According to Bloomberg and the Wall Street Journal, Apple and Nvidia are discussing getting in on financing. We all know that Microsoft is already financing OpenAI, and if Apple and Nvidia also get in on this, that means the first, second, and third biggest companies in the entire world will be backing the ChatGPT maker. Each of these companies have existing relationships with OpenAI. Apple announced that OpenAI would be the first partner for their AI system called Apple Intelligence, and OpenAI is one of the largest customers of Nvidia's AI chips, and Microsoft has always had a relationship with OpenAI. I think the biggest winner here, though, is Nvidia, because all the money that Nvidia is going to invest, it's going to come back to them as revenue, because OpenAI is going to have to use this money to buy more Nvidia chips. I wonder if there's going to be some regulatory scrutiny with this deal, because it's like a closed loop for Nvidia. Things are not looking too good for Intel. Intel is exploring options to split its foundry business and potentially its factory projects. Intel struggles to turn around its business and it's mounting losses. The company's longtime bankers, Morgan Stanley and Goldman Sachs, are providing advice on potential options. This may also include a merger and acquisition deal. Discussions are still in the early stages, and the options that are being considered will likely be presented during a board meeting in September. I'll keep my eye out for that and report any updates back. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Shares of Lululemon are rising this morning, even though the company reported earnings that weren't great. In fact, Lulu reported their first revenue miss in 2 years, with revenues up just 7%. Wall Street was hoping for something slightly more. On top of the revenue miss, the company also lowered their sales guidance for the year. But despite those numbers, the stock is up around 4% in the pre-market. It just goes to show that the market reaction can be unpredictable. It hasn't been a great year for Lululemon stock though. It's lost around half of its value this year. On the flip side, a stock not doing so great this morning is Ulta Beauty. Shares of the beauty store are sinking after they reported disappointing earnings. Ulta's same-store sales were down 1%, which is a huge miss because Wall Street was expecting sales growth. They also saw their profits decline from a year ago, and they lowered their sales outlook for the rest of the year. Warren Buffett is probably not very happy this morning. Berkshire Hathaway bought a $250 million stake in the company just last quarter, and the stock is down around 8% in reaction to these earnings. Speaking of Warren Buffett, before we wrap up the show, happy birthday to the Oracle, the Messiah, the GOAT. Berkshire Hathaway hit $1 trillion valuation this week, becoming the first non-tech company to do that in the United States. What a great way to celebrate a 94th birthday. That's all for today's show. Keep navigating those waters, and see you tomorrow.